Good afternoon. Welcome to daily currency update from the currency desk. On Monday, we saw a weaker opening for the Indian rupee in the morning session. This was mainly attributed to the fact that we had a weaker equity market opening for the domestic equities. At the same time, another fact that was contributing to the weakness in the Indian rupee was the fact that we had lower than expected GDP data from the Chinese front. Based on these two risk-off sentiments, we had seen a sell-off in the Indian rupee as compared to the US dollar. Again, later in the day, the rupee covered quite a bit of its losses intraday. This was mainly due to the fact that we saw a major fall in the value of gold and crude oil intraday. Now, these two commodities are the major components of Indian imports. So, because of a fall in their respective prices, and there being further expectation that these prices will go down, we could expect that in the near term the export valuations, the imports of these commodities would come down. In fact, market experts are predicting that we could see as much as 25% fall in the imports of gold from outside India. Based on such fundamentals and another rate cut expectations, currently we recommend a sell in the US dollar against the Indian rupee with a near term target of 53.80 in the spot. Coming to euro, we saw some correction in the value of euro internationally against all forex majors. Similar trend was seen against the Indian rupee as well, as the Indian rupee showed a lot of strength intraday. Mainly the risk of sentiments spread on to all the major pairs against the euro, and we saw a sell-off in euro against the other forex majors. We had a better than expected economic data from the European front, and on the contrary to that, we had the ESM manufacturing index coming in from the US, which was lower than expected. So all in all, due to a weaker USD and a stronger compared to that fundamentals for euro, we saw the euro rally against the US dollar as well. Yes, we are seeing a lot of inflows in the high yield European countries, mainly because of the huge quantitative easing done by Japan and US in the near term. Today we have the German ZEW confidence data, which is expected to come in lower than expected. Based on this, we could see some movement or some change in direction for the euro. Also, in the evening session, we have crucial US economic data, which include the CPI and the building permits data. Based on these data, we could see some movement in the euro in the international markets. Currently, majorly based on the strength in the Indian rupee as compared to the euro, we recommend a sell in the euro against the Indian rupee with a near term target of 69.75 in the spot levels. Coming to pound, yesterday we saw a very lackluster trade in pound against the Indian rupee, and also globally. There were no major triggers or economic data to be released yesterday for the UK economy, but today as compared to that, we have the CPI data to be released on the UK front, and based on the CPI data we could see some movement. But yes, contrary to the normal fundamental reaction, if the CPI data comes in better than expected, that is, if the CPI eases, we could see the pound fall as compared to contrary expectations. This is because there are expectations that if the inflation eases for the UK economy, we could see another increase in the quantitative easing done by the UK central bank, that is the Bank of England. And yes, vice versa, if the CPI gains or the inflation increases, we could see a more hawkish outlook coming in from the Bank of England, and similarly we could see a rally in the pound. Currently, along with euro, we also expect the pound to correct against the Indian rupee especially, and the current correction could extend up till 82.40 levels in the spot. Coming to Japanese yen, we saw some strength in the Japanese yen against the US dollar and against the Indian rupee in the near term, and there was some rebound seen in the value from the near term lows, that was around 100 levels for the USD JPY. Yes, this is due to the safe haven demand that has been shifted from the dollar to the Japanese yen because of the recent weak data shown by the US economy. Also, as compared to that, investors are trading or shorting yen cautiously at current levels because of the G20 meet that is to be held at this weekend. So people are expecting that all the countries across the globe could criticize the Bank of Japan for such heavy quantitative easing done. In the near term, we expect the Japanese yen against the Indian rupee to rally up till 57.20 levels in the spot. Thank you.